This candlestick captured all the liquidity right over here. Okay, now the market's currently right here. So we didn't know that it was gonna whip around and just turn around just like that. So we haven't entered just yet. So this right here gives you all the information that you need to identify your entry points. Now, what exactly are we looking at?
Yo, what's going on, everybody? Welcome back to my channel. And guys, if you haven't done it already, please hit the subscribe button, hit the bell. I'm gonna be dropping a few videos this week from beginner to all the way to a more advanced level when it comes to smart money concepts. So if you want to know more, hit the subscribe button, hit the like, ask me some questions, and let's get to work. Now, in this video, I'm going to be going over how to identify and break down what you need to be looking for when it comes to smart money concepts for beginners. So if you're new to this kind of concept and you want to dive deep into it, this right here, what I'm about to break down for you, is simply going to be exactly what you're looking for. So let's jump right into the whiteboard.
How do you backtest smart money concepts as a beginner? Well, let's go ahead and let's look at the market. So a typical market is moving up and down and sideways, such as consolidation. When the market forms the consolidation, as we all should know, it creates support levels and resistance levels. So as we look, right here is going to be our support level. We could go ahead and extend that into the future. Up over here is our resistance level. We could go ahead and draw that resistance out into the future as well. So now we have support and resistance. This is the first thing that everyone needs to understand when it comes to smart money concepts. The reason why is because support and resistance is the first thing that is taught to retail traders, to new traders. This information is found anywhere simply for a reason. This information is for you guys to simply understand how it works so they know exactly what you're thinking, and they can manipulate the market because they have so much money that they could actually push the market up or push it down before it does ultimately what it wants to do. So as most people are taught, if the market's right here and it goes to that upside, what are most people taught right here? Most people are taught to sell the market, right? When it comes to resistance, sell. When it comes to support, buy. So since everybody knows to sell right here, because that's what basic information is going to tell you, smart money knows one key thing. If they know you're selling here, here, and here, that simply means stop losses are up in there. So if your stop loss is up there, they're simply going to move the market down a little bit once it comes to this resistance area. But what they're going to do is they're going to push it down a little bit to get you excited, to get you to start selling because you believe it's coming down to this support level, which it is. But first, you must understand the market is moved off of liquidity, off of money. Money needs to be captured and distributed. So what the big ballers are doing is they're simply manipulating the market. They're pushing the market up and then tanking it right after that. Okay, they are simply buying to then sell the market. And the reason why is because they need to go ahead and capture all the money that's over here, everybody's stop loss. So everyone who's selling here, your stop loss got hit and then it went down to the downside. Market is currently in this area. All right, so I cleaned it up a little bit. So now let's say the market comes up into here. What we're waiting for with smart money concepts is we're waiting for the manipulation to happen. You know, the market could just go up and continue up, which means the bigger time frames ultimately wanted the market to go up, right? But we're gonna wait, we're gonna be patient. We want to see the manipulation happen. So what we're gonna wait for is we're gonna wait for the market to shoot up and take all the money. And when it does that, you wanna look for the very last up candle before the down move. Okay, so picture this purple candle as an up candle, and then right after that we had a big push to the downside. All right, and now the market fell. Market is currently right here. Okay, so you can see what candlestick captured the liquidity. You have this one right here. This candlestick captured all the liquidity right over here. Okay, now the market's currently right here. So we didn't know that it was going to whip around and just turn around just like that. So we haven't entered just yet. So this right here gives you all the information that you need to identify your entry points. Now, what exactly are we looking at? Well, we're going to be looking at this candlestick right here, the last up candle before the down move in this scenario. Okay, it would be opposite if it was on the downside. It would be the last down candle before the up move. Okay, so once we identify this candle right here is your FU candle or your institutional candle, whatever you want to call it. Now from here, when the market is down below it, this candle you want to mark up. You're simply going to take the open of the candle, of the body, not the wick, and you're going to draw that into the future. Okay, then you're going to take your Fibonacci. You measure the open or the close, not the wicks, just the body. And then the 50% of that, you draw into the future. Why? Majority of the volume is in the middle of the candlesticks at that 50% mark. So the market's currently down over here. We are simply only going to enter when the market comes to our point of interest candle, our institutional candle. So anywhere in that purple area, we could enter into the market. But we want to see one key thing first. We want the market to kind of do its thing. We want the market to come up here and create another high or something like that, or maybe even a double top, right? Because when the market does that, that does what? It creates more liquidity. You guys must understand that the market is fractal. These patterns are going to happen over and over and over again. See this big pattern? It's just happening again on a smaller time frame. Okay, and watch this as I break this down. So as we come over here, the market is currently right here. It created some liquidity. That's awesome. We're going to be patient. We're going to wait. The market's going to do its thing. It's going to spike up, come into your point of interest candle. This, the open, right? The open is entry 1. The 50% is entry 2. So we can put a 1 right here and a 2 right here. Okay, your stop loss, you go back to your institutional candles above both of the wicks, extend that. That right there is going to be your stop loss. Okay, so market comes in here, enter 1, entry 2, then it's going to trade away. The crazy thing is, in this whole scenario, you're going to have a new point of interest candle. You're going to have a up candle happen before the down move takes place. And then you just go ahead and find your new institutional candle. All right, guys, nothing but love for you all. Hit me up if you have any questions, and don't forget to subscribe, hit the bell. I'm going to be dropping quite a few videos this week, and looking forward to seeing y'all soon. Let's get it.